Good evening. This is the Elliott wave update for the S&P 500 and the NASDAQ 100 for Monday, August 29th, 2022. The market did bounce a little bit today after overnight reaching a decent low, right into support, and spent the day kind of bouncing between a pretty tight range, but eventually just continuing to work its way higher. Here on the daily chart, I am continuing to leave open or leave up as labeled the primary B wave completing at last week's or the 16th high, which here in the NASDAQ, here in the S&P was 43.27, almost 28. So this still remains more plausible. And again, Friday's strong decline is the kicker. That it has not totally canceled the previous analysis where we're still within the primary B wave, and this is intermediate wave A. This would be intermediate wave B. But if inside of it, this is an A, a B, and this is a C wave to complete that B wave, and it's come now towards, there was support at 4,000 down to, I think, 39.83 would have been for that one. And that's running additional fibs from that high to here, and then also to show support lower. But that would have come in, I believe it was 4,001 and down to 39.83. So it's beginning to truly take a back seat. I have to leave it there until it's broken. And to break it as a B wave, an internal B wave, it can come all the way down and retest closer to 36.39 and then still rally. So unfortunately, that's the way that one's going to play out. So we have to leave it there, but I believe that it could be taking the back seat. When it starts to get bigger, and it just won't look right. But it can. Right now, still fine. Otherwise, I still believe that if this is the completion point for the primary wave B, we're going to be putting in a five-wave decline for intermediate wave 1. And that five-wave decline will consist of 1, 2, 3, 4, 5, but it'll be 5 waves of minor degree inside that first wave of intermediate degree. So this would be minor 1, minor 2, we're in a minor third. Within that minor third, we likely completed wave 1 at the overnight low, which was 4,006, almost 7. So, and then we're bouncing. Now, I'm going to take it off of that chart. Let's go down to the hourly chart. Let's open it up because the bounce itself was pretty garbagey. Had some nice little flipping runs, and they were pretty insistent, let's say. On the hourly, they went up for an hour. It kind of, farted around a little bit, but it managed and it went and it got itself up there. And pretty much not would have been resistance, because this is it is resistance. It's support on the way down for the third wave. But I'm looking for the third wave will be equal to wave 1. No, actually, excuse me, that would be a minor third, would be equal to minor wave 1 here at 4,001. My eyes are playing tricks on me. So, but within this third, I'm looking for the relationship that's going to be between this and this, because this third wave, I'm looking for much deeper levels or to come in before the minor third is complete. Now we're taking it off of here. And because that decline was so large, it is extending this wave. So now I'm going to put an additional set from there to that's saying that this is the stop for wave 2. And if it is, I'm probably too high, but you're going to get some overlap down here, 38.57 for a 3, and then a 4 and a 5. And that's to say that wave 1 was the extended wave. Wave 3 just cannot be the shortest wave. Well, we can get this thing done and still be at least 200 to 300 S&P points below, if indeed it's going to drop, and now drop in an internal third wave, and then a 4 and a 5, and that'll complete the larger minor. So we're coming off now in a minute degree. There's wave 1. Wave 3 will equal wave 1. Take one of these out. This guy. Yeah. And would equal it at 4,001. My suspicion is that it will continue. So this will be 1, a 2, and we drop in a third, maybe get down to here, come up in a 4, and drop in a 5th. And then we're going to be putting in the minor 3, and then we get another rally and another drop to finish intermediate wave 1. So there's still a lot of decline to come. This is just for the third wave. Now, let me go out to the daily chart, and we're going to be looking at the C wave. I'm going to take that off for now, and now we're going to take a look at the C wave. And the C wave, same concept. We're going from the top of wave A where it began to the bottom of wave A. That'll work. And that'll work. So let me just correct very quickly, because I like to be pretty much on top of it. So the beginning point was 48.08. And the end point was 43.28. And that midpoint was 36.39. So there we go. Those in, bingo. All right, so the larger primary C wave still projects a lot lower where wave. So, and what we're coming off in is a primary C wave, which is 5 waves of intermediate degree. And if I'm thinking that intermediate wave 1 is going to bring us down into here, and then, intermediate wave 1 already did, wave 2, but that minor wave 3 is going to bring us down into here. Then the minor 4 and the minor 5 could bring us down into here. And that's only going to be intermediate wave 1. Then we're going to keep going. So we have a path that could lead us all the way down to those March 2020 lows. And that's where I'm thinking that this C wave will finish up. So we're already down to 1.618 just for the C wave. And that's not uncommon. On this degree, remember, I've been talking about the C waves all the way now. As you add up in degrees, C waves are always going to be more disastrous and more destructive than an A wave. We compare them to on a Fibonacci basis, but they normally will go much further than being 100% because they're very destructive. They're very forceful. So this is all in the realm of reality, if indeed this is going to be the endpoint for primary wave B, and we're in a primary wave C. So as I'm counting this out, I will be counting out more carefully. I can go back to that hourly chart because I want to get everything. We're in the minor degree. And so I'm going to do it. Minute 1, minute 2. This was a massive drop, folks. But if it was only wave 1 of the third, wow, 3 of 3 is going to be pretty wild. And I think it could blow the doors off. Be a total of 200 or 300 points. This 42.15 down to was 115. So this could be 200 then. 115 was pretty big. 115 from wherever this ends gets us down to 39, 35, somewhere in there. And imagine we could find some support. But in any case, it could get ugly again. Now, for tomorrow, at least here in this market, leave open the possibility that this little wave 2 is not done. So leave open that it can pop up here towards the 50s. That's 4078 to 4100. So from here, decent rally. They could do it overnight. Maybe we get a piece of it. Maybe they don't. And that was the high for wave 2. And now the selling is going to pick up again. Remember, the observation that we've been making is that the rallies, while persistent and covering some decent ground, are coming in a little bit weaker than what would be expected in normal Fibonacci. I can run Fibonacci, just retracement from that high to that low, and that would put into place where I would believe we should be rallying back to. There to there. 382 right here, right? So here we have a fib, the normal. The first fib on a bounce is going to be 0.382. There it is, 4,086. Well, we got up to 64. 20 more points, sure. From here, nice C wave up or whatever we're going to call it. But it'll finish the 2. And now we got a little bit extra room. So you'll notice is what I said before, that the Fibonacci's will line up often when we're back in more of an impulse, lines up with the moving averages. This is the case again. All right, back over to the NASDAQ. Same picture, same story. Bouncing around, doing all of a sudden jerks down, and it was kind of messy, but did okay. Same story. I'm still counting it with the primary B wave being the completed at 13,741, and that we've come off in a minute 1, 2, 3, 4, 5 to put in the minor first wave, and then that rally that took us up to Friday's turn, huge turning point, and that was at 13. Don't tell me what it was here, folks. 13,220. That's right, my brain. And it just kind of dropped. We did make a new low last night, same as over in the NASDAQ and on the S&P. Wow, brains, huh? At 12,401, our support was right there below. We had 12,400 as support for the possibility that this actually is still in progress. This is intermediate wave A. We have a B. Friday's decline is really knocking that thing to the back seat. But I have to leave it open because remember I said that if this is the case and it's an intermediate B, I would not expect it to break that low, which is at 11,068. That still remains. I wouldn't be expecting it to break that low. And with that in mind, every time we start to tick down, while it's allowable, the pattern will keep us in line as to what it is. Because remember, this would be A, B, and we're dropping in a C wave. And that was a huge beginning to a C wave of this caliber. So the minor degree within a smaller intermediate degree B wave. So we'll see. And back at the count that I'm showing, though, it does allow for additional. And back down to that hourly chart, excuse me, so we can pull this open and see that I've labeled it as minute wave 1 of minor wave 3. They're still working on this minute wave 2. We need to leave open the possibility that we're going to take another little trip and get up to this level. And we have the fibs already there. And that would be, we have 12,680, 12,715. And then we have the 50 SMA sitting up at 12,765. Nice little zone. The possibility remains. Not saying it's going to happen, but it could happen overnight. We don't know. We don't know what's going to come in and why they're going to want to trade. And we don't care. We're leaving open the possibility. If it should happen and we're awake and trading, when it starts to break, it's a good trade. your moving averages and your fibs are going to be able to give you entry and exits. All right, so if it continues to come down though, then we're going to put a 2 here, and then we're looking at that 303 move. What's it going to be? Ugly, just like that. With third waves are normally the longest and the strongest. So I would think we get to drop maybe 1,000 points, maybe. Doesn't have to happen in one day. It can happen over a couple of days. This was 500. This was actually closer to 600. So that can happen again. And from here, we're looking at 12,000 or even lower. Remember, we have this. And again, 1, 2, it's a third. Should be the longest and the strongest. So you're beginning to piece together the picture. And just to drop out to the 4-hour chart, and then we can just kind of open this and pull. You can see that indeed, these are the measurements for a primary C wave. Going to be 5 waves down. If I'm looking to where I think that intermediate wave 1 should come in, well, I'm still counting the minor third. If the minor third comes down to here, I get a minor 4, a minor 5. It's going to come down to the 50%. All right. And that's just going to be putting in intermediate wave 1. Then we get a nice rally, and then we start to come down again. Remember, again, on the primary degree level, I would be looking for the bottom of this primary degree sequence of ABC to take us down here. You're going to say, how? I don't know. You tell me. Stranger things have happened. Would I have known here? Oh, watch out. We're going to drop into this horrendous pandemic, which is still going to plague us 2 years out, working on 3 years out. And that's what it did. But now we're in a totally different situation. Now we're paying for all the money that they gave out here. Now we got to pay for it. And it's going to affect their earnings, et cetera, et cetera. Now, so here, this is what we're looking at. For wave B, wave C to be equal in length to wave A, common, that's at 8,041. I think it comes in a little bit larger, and I think that we end up closer to the 1.236 or closer to like 7,000, dipping just below. But this low is 66.14, and we have fib support at 66.95. So I think that, is it possible? You betcha it is. It definitely is possible. And now we're set up in the wave pattern and in the type of wave that could actually do it. A larger C wave. And by the way, all it does when you get down there is to complete the cycle wave A. Then we get a cycle wave B. And remember, as I said, each time we go up a degree, the intensity and the ground covered, the price gain or decline, also grows in intensity, grows in number. And so that will continue. So a primary C wave down will be at least, I'm going to say 5 to 10 times this in intensity. This was like, we had this big joke of a rally in there. I'm saying this goes. C waves tend to be much more destructive the higher in degree that you get. So we get a lot of days like we had on Friday. I would say several within this. All right. So for tomorrow, I think that we still might play around, and just like I'm saying in the S&P, and excuse me, dry throat, and get up towards the 50s and that resistance at 12,715. And then we should begin the next leg down, and it should be a 3 of 3, and it should go quickly. So again, similar to Friday, I think we'll get very shortly. All right, our next update will be on Tuesday, August the 30th.